Good morning, this is Monty once again from DPL Surveillance Equipment. How you guys doing this morning? Hope you're doing great. It's a fantastic day out here in sunny Southern California, particularly Camarillo, California. That's where I am. And looks like it's just couldn't be better. I guess it always could be better, but definitely it's not something you want to take for granted. As far as having perfect weather and having just a general state of affairs, very, very nice. Things are coming together. I have excellent health. Thank goodness for my rigorous workout routine. Established a fair amount of financial sovereignty for me and my family and my business, thanks to Bitcoin and cryptocurrencies. And my diet and everything is pretty much optimized to a very large degree in terms of where it should be, thanks to eating healthy and staying away as much as possible from junk foods and processed foods. So, spiritual, physical, financial well-being is all very, very important. So make sure you guys balance those at least those three pillars: the spiritual and the financial and the physical well-being. Okay, so at least tackle those three pillars, and most everything else will fall into place. Okay, so you may ask, who is this guy going on and on and on about these things such as spiritual and physical and mental well-being and all of that? Well, my name is Monty Henry, owner of DPL Surveillance Equipment. I run a full-service surveillance and security equipment company, and we have lifetime guarantees and warranties on all the products. 24/7, 365 tech, sales, and customer support. Let me turn my phone off before I forget. Very important. People just have very bad timing. They don't call you until you're busy doing something important. So, anyway, that's off. We have a very large articles directory on the website. Read all the articles you want for free about health and fitness and finance and cybersecurity, surveillance, counter-surveillance, cryptocurrencies, etc., just a lot of different things we're covering. And in addition to that, basically it's a media center. I call it a media center where there's all sorts of multimedia. There's demonstration videos. There's podcasts such as this one when I upload it. There's blogs and just a lot of information. Basically, overall, lots of information. And I almost forgot what's going on in the economy. What's going on the bigger front as well. In addition to my business itself, looks like. Let's see. Oh yeah, Turkey has raised their. I think they raised their interest rates to like 24% or something like that. Emerging markets are still taking it on the chin because interest rates are going up in the United States, and because so much of the business and the emerging markets are done in U.S. dollars and are done through the banking system. They typically have to follow our lead or else suffer the consequences. So I think the emerging markets are going to learn and are learning. They have to decouple themselves from the U.S. dollar and try to have their own financial sovereignty. Speaking of financial sovereignty, by adapting Bitcoin as quickly as possible. Now, a number of those emerging markets, at least the presidents and the prime ministers and the people who are responsible for the decision making, they're going to make the mistake of creating their own cryptocurrencies. And then the citizens will learn about cryptocurrencies and what the differences are between Bitcoin and the shit coins or country coins, in this case, that the countries are going to be creating. There's some major differences, you guys. And shit coins issued by the countries and individuals and companies are eventually going to fall apart, unravel, disappoint, and disappear. Okay? And this is going to actually highlight the positive characteristics of Bitcoin itself. It's going to bring that more and more into focus. But, however you get to Bitcoin, it's good. We don't care how you get here. What we care about is that you eventually join, that you eventually become educated. So, just like they learned look like I've got a tree cutter in the background. It's going to be creating a little bit of noise and distraction. Not quite sure how that's going to work out for me. But anyway, the Marshall Islands, as I mentioned in the other podcast, they have been forced to make a decision because the banking system, the United States-based banking system, has pretty much isolated and alienated the people in the Marshall Islands. So those islands have considered coming up with their own cryptocurrency of their own. And the IMF warned them to not do so. Now, believe it or not, these people didn't have a choice, really, because the banks were leaving. The current correspondent banks need banks to deal with, right? And unless you have a banking network in your country, then you can't really survive on your own. So anyway, in the Marshall Islands, they realized that because they were being alienated by the banking system, which is U.S.-based in this case, they had to make a choice for the survival of the citizens. People literally could not survive unless the businesses and the people had a way to interact and conduct their financial transactions. Okay? So anyway, they're adopting cryptocurrency of their own. IMF doesn't like it, but, you got to do what you got to do, right? Anyway, getting back to my business real fast. We're kind of jumping all around here. But anyway, my business has gone Bitcoin and cryptocurrency as well by means of our shopping cart. We have a shopping cart on our website, like most businesses, but our shopping cart happens to accept Bitcoin. And we're going to be getting rid of MasterCard, getting rid of Visa, getting rid of American Express, just to prove and show and demonstrate that we don't have to be bothered with being beholden to any authority who's going to tell us what we can sell, what we can't sell, who we can sell it to, and all of that. So that's going to change completely now that our shopping cart changeover has been completed. Is to allow us to accept the Bitcoins and the Ethereums and the Litecoins and the Bcash. That's all completed. So next step is just to promote it more and more and see if we can conduct all of our transactions, 100% of them. Well, not exactly 100% in Bitcoin and cryptos, but because we're gonna accept checks and money orders and cashier's checks and wire transfers, because those payment alternatives cannot be reversed. Okay, you can't just go to some company and make up some stupid excuse and do a chargeback or dispute when it's like a cash type of transaction, wire transfers, checks, Bitcoin, those types of transactions are irreversible for the most part, as long as those checks clear, and we always make sure our checks clear. Just for you merchants out there, so you'll know how to guard yourself against these credit card abusers. In addition to all of that, the website has been redesigned, looks very good, it works very well, and we're adding more and more features. Actually, we're offering more features and have done more to upgrade to the website and get it prepared, then I think people appreciate. We don't even have the consumer demand. The people don't even appreciate all the changes, all the money that I put into the website. But anyway, we always go above and beyond the Call of Duty to demonstrate that we're ready, willing, and able to take advantage of e-commerce. So if the consumers are ready and they have the financial wherewithal, we're ready, basically. So having said all that, what else? Let's take a look at this article. This article focuses on, or more specifically, the article is called Crypto Tourists Flee as Bitcoin Slump Drags On. Again, crypto tourists flee as Bitcoin slump drags on. Value of cryptocurrencies has slid 76% after exceeding $800 billion earlier this year. By the way, I'm going to include this article with the podcast just in case the noise is too disruptive. I didn't know the tree cutters were going to be out. Again, value of cryptocurrencies has slid 76% after exceeding $800 billion earlier this year. The cryptocurrency rout that began earlier this year with the popping of the Bitcoin bubble has only gotten worse, and there is little signs things will be getting better soon. The total value of all cryptocurrencies fell below $200 billion last weekend, down 76% from an all-time high of $832 billion in January. It is a dramatic decline for a sector that experienced furious growth in 2017, driven by a surge in speculative interest around Bitcoin. The cryptocurrency market is notoriously volatile and has weathered several boom and bust cycles in the nearly 10 years since the pseudonymous Satoshi Nakamoto unveiled Bitcoin. Bitcoin is a digital currency that isn't sponsored by any government or single entity. It runs on a platform known as blockchain, which is a decentralized, immutable ledger of transactions. Last year's boom was marked by both mainstream interest in Bitcoin and an explosion in the number of alternative cryptocurrencies and digital tokens. These dramatically increased opportunities for speculators and heightened volatility in the nascent market. The problem is that such speculation wasn't matched by concrete activity. More people may have heard of Bitcoin than a year ago, but even the ones who hold it still don't have much to do with it besides trade. Now, that is a false statement. Let me make this perfectly clear. Those who hold Bitcoin are the ones who still hold it, still don't have much to do with it besides trade. Okay, so nothing could be further from the truth. Okay, I'm a holder of Bitcoin myself, me and my wife. We have held on to Bitcoin probably for, 4 years, 5 years at least. And trust me, we know what to do with it. When you make the type of insane returns that we've made, you're not so much worried about what to do with your returns. You're going to figure out how to take advantage of spending some of that money if you want to. Okay? The person who created this article really didn't do themselves any service by writing that part in there, because that is a ridiculous statement. There are plenty of Tesserosas, plenty of worldwide trips, plenty of mortgages that have been paid off, plenty of credit cards that have been paid off, because we know exactly what to do with our Bitcoin. Okay? If I sell a certain amount of Bitcoin, for instance, and cash it in and pay off my mortgage, that's useful. That demonstrates that I actually know what to do and that I'm capable of realizing some benefit from my Bitcoin. Okay? Even if I don't convert it into fiat immediately, I can always put it on a shipped card that's offered by Coinbase, right? I can always put it on a BitPay card that's offered by BitPay. And I can spend that money all day and night in restaurants and stores, online, offline. It doesn't matter, right? If that's not useful, I don't know what is. Okay? And personally, me and my wife, we've been on trips to such places as Alaska, as Peru, as Hawaii, celebrated our birthday in South Miami Beach, checked out the Key West area, the Keys, and went to the southernmost tip of South Florida, in the Key West area. That's why, hence the name Florida Keys and Key West. Was it Costa Rica? You name it. There's like countless trips and countless benefits, and pretty much zero debt, because Bitcoin has been used by us and it's very useful. So you just remember, you guys out there, if somebody tells you, you if you accumulate Bitcoin, you won't be able to use it. That's insane, because again, when you have the type of value that we have locked up in Bitcoin, you can get it out, and you will get it out, and you will figure out a way to pay those bills off, pay off the mortgage, pay off the cars, fund the vacation trips, and live like a sovereign individual is supposed to live, okay? That's how useful Bitcoin is, okay? I don't know what these guys were thinking when they wrote that part of it in there. So I just want to stress that that's ridiculous. That's a ridiculous statement, and it's totally false. Okay, moving right along. The sell-off in recent months largely reflects doubts about the practical utility of cryptocurrencies. It is still difficult to use Bitcoin and other more established digital currencies to pay for goods and services, causing some investors to question their potential to transform commerce. Let me read that again. The sell-off in recent months largely reflects doubts about the practical utility of cryptocurrencies. It is still too difficult to use Bitcoin and other more established digital currencies to pay for goods and services, causing some investors to question their potential to transform commerce. Well, that's sort of true. But to be honest with you, though, a lot of people who jumped into Bitcoin and cryptos in general weren't really looking for a practical use of Bitcoin, of the cryptos themselves. What they were looking for was making a lot of money very quickly. So it's a big difference. As a long-term traditional investor, I have to say that when you're investing in any new investment, any new burgeoning industry, it could be the tech sector, it could be whatever sector that's growing and emerging, you typically can't afford to be too short-sighted. Okay, so as the name of the article aptly is termed, crypto tourists. That's exactly what they are. They're crypto tourists. 1 minute they're in, next minute they're out. Okay, that's why you call them crypto tourists in the first place, right? So, I guess you got to stick with the proper theme, or the way you titled the article in the first place, because these people aren't committed, and that's clearly demonstrated in all the frustration that they're experiencing right now as they jump in and out. So that's kind of evident, right? And as far as transforming commerce, you don't transform commerce a snap of a finger. You can't just click your heels and transform commerce. That's going to take quite a bit of effort, even with Bitcoin, and let alone the other cryptos, or otherwise known as shitcoins. When people diversified into those shitcoins, they knew full well that they were looking at the heavy discounts that they were getting on the price. So when you get those tremendous discounts, like buying something for 5 cents or less or whatever, the good news is you save a lot of money. The bad news is you take a lot of risk, and for that risk, you better be prepared, just in case it doesn't work out the way you thought it was going to work out. So again, we can't read too much into that garbage about the whole world and the whole internet is not transformed in 6 months and I'm out of here. Okay, that's not the way it works. Anyway, this happens in all major technology development cycles, said Ariana Simpson, a managing director at venture firm Autonomous Partners. You see a decoupling between the financial capital and where the technology actually is. Bitcoin has fallen about 68% since its peak on December 17th, yet its smaller rivals known as altcoins, and I call them shitcoins, but they call them altcoins, that have suffered the sharpest declines in recent months. Ether, the second most valuable cryptocurrency behind Bitcoin, is down 53% since June 30th, while XRP, also called Ripple, is down 43%. Bitcoin Cash is down 37%, and EOS is down 38%. Bitcoin, by comparison, has declined just, where am I? Bitcoin itself, by comparison, Bitcoin has declined just 1.7% over the same period. It hasn't been a tranquil period, though. Bitcoin is down around 20% from a recent peak in late July. Many crypto tourists who bought Bitcoin and other tokens in 2017 when prices were soaring lost faith in the transformative potential of digital currency, said Dan McArdle, co-founder of cryptocurrency research firm Messari. We're just in one of those periods where the hype has died down, he said. Take Ether, the in-house currency for the Ethereum network. The project took Bitcoin's core concepts and adapted them to a platform built to support apps, similar to Alphabet Incorporated's Android operating system. The value of Ether soared from $8 in January 2017 to $1,400 by January 2018 as investors sought to profit on Ethereum's potential, yet there is still little commercial activity 2 years after its launch. So yeah, I have to admit, Ethereum and some of these shitcoins didn't deliver and won't deliver, okay? But again, when you have competitors to the Bitcoin, just like when you have competitors to the internet, when you have AOL or GeoCities or some of these companies that nobody even remembers anymore, when they offer their own version of the main event, which was the internet, was the main attraction when it first came out, and then AOL and some of these other companies decided they would have intranets, just like private companies or just like these public companies like IBM and Microsoft and those guys. They want to offer private blockchains, right? Well, we already have a real original blockchain associated with Bitcoin, right? But these guys want to offer their own private blockchains. This is no different. Everybody wants a spin-off. Everybody wants a cheaper version. Everybody wants to have a knockoff, right? But those knockoffs and those copycats are going to eventually fail. Most of them do fail because, again, you can't have a copycat of an original when the original is definitely the main attraction, and it seems to be capable of doing everything that it's supposed to do, and it seems to have the network effects, and it seems to have the money behind it, and it seems to have the full confidence of Wall Street and various government agencies and various countries flee to it when there's a problem. if you have a problem like they're having a problem in Venezuela, Argentina, Cyprus, Greece, Zimbabwe, um, these countries, they need help and they need it fast. And a lot of them are using Bitcoin, for instance, to get that money out of China to avoid capital controls, to get that money out of Venezuela and Argentina and various other countries. And so we're starting to see that you can't play around with shitcoins and alternative strategy when you have your life savings on the line. Okay, if you want to speculate and play around, because you're in the developed world and you got nothing better to do than speculate, that's different. But when your life savings is on the line, and China's cracking down and telling you can't spend any more than $50,000 or per family per year or something like that and get that out of the country, then now you have to make a decision, right? Or if you're in Argentina and you can only get out $1,000 a month, a year, or whatever it is, you got to make some decisions, right? So this is what we're talking about, you guys. The main attraction are shitcoins, and don't put a lot of money into shitcoins if you can't afford it. If you don't know what you're doing, stay away from it. There are about 900 live dApps, or decentralized apps, on the Ethereum network, with several hundred more in development, according to data from the website State of the dApps. But there are only 9,000 daily active users. That isn't a lot of activity, and helps explain the huge fall in value Ether has experienced. At its height, Ether was worth $133 billion. Today it is worth around $19 billion. Regulatory issues also have weighed on the sector of late. The Securities and Exchange Commission continues to reject the idea of a Bitcoin-based exchange-traded fund, and the Justice Department is investigating potential market manipulation. Well, to be honest with you, look, we have determined in the crypto space, the Bitcoin maximalists and the dedicated, serious enthusiasts of Bitcoin, we've already determined that, you know what, maybe this ETF garbage is not exactly what we need anyway. Okay, it was good. There was a lot of hype associated with it. People got excited. Everybody thought it was the next best thing to slice bread, and it was going to revolutionize Bitcoin and the industry overall. But after so many setbacks and false starts with the SEC, we've had time to examine that. And now most of us have come to the conclusion that Bitcoin can survive without an ETF. Okay? If we don't get those types of players in this space, and if we get natural adoption that's organic in nature, that grows out of a necessity or utility of using Bitcoin, then, who cares about what Wall Street is coming up with as far as these trading vehicles are concerned. There's nothing like organic growth sometimes, and you get that when people purchase your asset, purchase the asset, excuse the noise, and they actually use it as compared to just having Wall Street create these trading vehicles, and when they're hot, they're fine, and then when they go out of favor, or when they're no longer useful or something, then who cares about that trading vehicle that someone just came up with? Besides, we learned a valuable lesson during the 2008 financial crisis that a lot of these synthetic vehicles or assets or things that they were creating really didn't do us any favors at all as far as financial stability and for the economy's sake, and investors. Let's see what else we got. And as far as the Justice Department investigating market manipulation, well, they should investigate it, I guess. If they're going to have an alternative to the fiat system, the dollar, then you better make sure Bitcoin is sound, because the central bankers and the federal government, they know full well that the dollar's days are limited, so they really want a smooth transition from the fiat system into Bitcoin or cryptocurrencies in general, because the writing is on the wall. You can only print so much fiat before you ruin the value, and they don't hardly have any tools. Interest rates are so low. The traditional central banker tool to address an economy that goes into recession is to raise interest rates. But interest rates are so low right now that you basically don't have a lot of, I'm sorry, they lower interest rates after they've raised them. Excuse the noise, but the interest rates are so low right now that you can't raise them high enough, quick enough to fend off a recession once it comes. So the base at which they're starting at right now is so low, it would make very little sense to try and raise them quick enough. So anyway, raising rates right now seems to be a loser's game, mainly because they don't even know if the economy can sustain the shock of higher interest rates. The credit card loans, the household debt, the corporate debt, the government debt is such that it'll probably be unbearable to have to pay that debt off with higher interest rates, especially when the economy is already faltering, according to all the things that I keep mentioning over and over. Cryptocurrency veterans remain sanguine about the market's long-term potential, pointing to its short but turbulent history. After trading as high as 11,047 in December 2013, Bitcoin fell as much as 85% over the next year. It didn't surpass that previous high watermark until the spring of 2017. In 2011, the price fell more than 90%, from about $30 to $2. At a return of 100 times in a year, a return of 100 times in a year is delightful, said Miss Simpson. I enjoyed that as much as anyone, she added, but it's not realistic. The people who were coming in to get 100x are in for a rude awakening. Yeah, if you're coming into this for the wrong reasons, you're going to be disappointed, definitely. Remember, you guys, the technology, the idea that you have a choice to the fiat-based system is the main attraction. Okay, that's not going to change anytime soon, and it shouldn't change anytime soon. If you make a decent return off your Bitcoin, that's icing on the cake. But the main attraction is and always will be financial sovereignty. When you get a chance to control your money, your financial destiny, leave something to your children that no one can take away from you or them, that's the main attraction. Okay? So again, remember, the things that make Bitcoin important are the things that are happening in the emerging markets and the developing countries. The idea that now they can protect their wealth, they can send money back and forth to each other without intermediaries, without confiscation, without government control. Okay, these are the main events, the main attraction. As you will see, even in the developed countries, as they ruin these currencies more and more, and it becomes more and more obvious, then that'll become more apparent. But right now, it's definitely apparent in a lot of developing markets and developing countries, and this is becoming more and more prevalent every day. Okay, remember, currency crisis, such as Turkey, such as Venezuela, such as Argentina, such as Zimbabwe, such as even Iran. That is real. Those people are hurting, and they're getting their money out of there, and the country's prime ministers and the country's presidents, etc., are definitely looking at cryptocurrencies as a way out. They can avoid sanctions. They can do all sorts of things that you couldn't do under the traditional banking system. So just make sure you guys understand this is very real, and it's not going to change anytime soon. And when you have the IMF and the Bank of International Settlements, and when you have the World Bank, and when you have all of these financial institutions trying to scare you away from this idea or these concepts, they're doing it for a reason. They want to keep you enslaved. They want to keep you under the impression that everything is perfectly okay, and you don't have anything to worry about, and that the fiat system is going to survive. It's not going to survive. They know it, you know it, and eventually you'll have to make the transition. But they're trying to make it a smooth transition. That's why the Justice Department and the regulatory agencies are going over Bitcoin and the blockchain and making sure that they understand how it works, so that when Wall Street makes the transition completely and the mainstream can make the transition completely, we'll have an alternative or a backup. Because again, your dollars are worthless. You're wasting your time working your asses off for a living, and they know it, and those days are numbered. Anyway, as we like to say at the conclusion of every podcast, you guys keep your eyes and ears open and stay safe out there. Have a great day. Thank you. Take care. Bye.